Stop the music. Stop the music. Hi, everybody. Welcome to Financial Thing Thursday evening live stream. I don't know why I have these headphones in. Let me take that out. Just let me know if you can hear me okay out there on the stream. Yeah. What are we going to talk about today? Well, Thursday evening is going to be dedicated more to peer-to-peer lending now, as we are streaming on Tuesday evening now, which is going to be stock and crypto focused, and Thursday evening's live stream will be peer-to-peer focused. We may do a little bit of chatter about the markets. Stock today. Yeah, I thought I might add a little bit of music behind, the opening. We'll see. But yeah, today we're gonna be focusing on peer-to-peer lending. Thanks for joining. Please hit that thumbs up, subscribe to the channel, share the video, whatever you can do to help promote the channel. I greatly appreciate to you. Thank you very much. To all the Patreon subscribers out there, special thank you to you. And we are going to be looking at the peer-to-peer lending news today as usual. And also we're going to be looking at assets capital inside of what's going on in the dashboard, and particularly looking at the provision funds that they hold to help with loans that are defaulted or that are having problems. Yes. And we're going to take a look at, what else are we looking at? Shojin. We're looking at Shojin Property Partners, I think they're called today. I just signed up for an account, and I'm going to go through the process that it takes to get the account activated, because I haven't had time to do it today. So I thought, well, I may as well do it on stream. I don't know how hard it's going to be, but I'd like to kind of dig around their dashboard. I'm trying to get, I think his name is Layton. He's the CEO of Shojin. Reached out to him, try to get him on the stream to do a live session. Hopefully that'll work out for you. So quick shout out to everybody in the stream this evening, coming from the UK and wherever you are in the world. I know we got, let's see, Alan Toombs is here from Basingstoke in the UK, Invest22 in London, Brian in Woburn, Colin Perry in the Peak District, Double D, Dave Dawson here from Staffordshire, John Day in Nottingham, hi Mike Powell, Liverpool, what are you doing in Liverpool? Normally in Southampton, Peter Vince in Leatherhead, Stephen Hale, Nottingham, Robert Pates is in Greece, we got Paddy in France, Alan in Malvern Hills, Paddy says late of Wales, I'm not sure what that means, Paul Bagworth in Kenilworth, what else, Accrington, Mr. Accrington is here, Aki Chap, Alan Stratford, Annabelle, my voice today. Annabelle Nyron is here. I think maybe you're in Spain. And we have Black Label Expat. I think you're down in Colombia. So we've got a very, very global viewership today, which is always nice. He says, what it do? That's a very American thing to say. Yeah, so anyway, let's get right into the news. Welcome again. Thanks for joining. Let's take a look at what we have today. Let me share my screen. Zoom in a little bit. I've been asked to zoom in a little bit closer so you can see what I'm reading. Hopefully that helps a little bit more. With the zoom, it's always a little bit more difficult to tell what you can see versus what I can see. I got this big 27-inch monitor here. LendInvest sees rise in buy-to-let remortgages to find stability in certain times. LendInvest has seen a rise in remortgages in the buy-to-let market as investors look to secure properties and profitability for the long term. The specialist property lender asked two of its regional business development managers about trends in the market. Both noted increased remortgage inquiries as landlords look to secure long-term stability in the portfolio. I think this is an important piece of news because we have what I believe some very, very turbulent times to come, not only in the US, but in the UK. We're going to obviously see some interest rate hikes this year. There are talks of between 5 to 7 hikes of interest in the US, which really will have a knock-on effect to other countries and other continents in the world. I do believe that the UK's interest rates will also rise. And what that is going to do is going to put a real grind on the property market because, you know, I think as a generation, you know, some of you may remember when mortgage rates were in the teens. I think back in the 80s. Don't quote me on that. Personally, I'm 49 years old. I don't really remember those times because I was a young little whippersnapper back then. But I certainly could see mortgage interest rates going into the high single-digit figures to really combat this inflation problem. So if that does happen, this is obviously going to have a knock-on effect on what a lot of investors, landlords, buy-to-let landlords particularly are trying to do is to lock in mortgage rates where they are right now. And we've seen mortgage rates, actually interest rates, start to rise even in the last few weeks from the low, 1.5%, all the way up to coming maybe 3.9%, 4%, which is a big jump. And I think this is just the beginning. We haven't even seen any interest rate, actually official hikes in the US yet. We've seen the Bank of England raising their interest rates in the UK. But I'm going to call it here first. I think we're in for a nasty time. I think the word recession certainly springs to mind. It's been long overdue. Haven't really had a recession in a long time, so I definitely wouldn't be surprised. So that really feeds into this story about Lend Invest seeing the rise in the buy-to-let remortgages. What about Cufflink? Cufflink adds select IFISA loans to secondary market. So if you have individual loans or you want to sell now in your IFISA, in your ISA, you can now put them for sale on the secondary market. And that's a nice tool. Cufflink secondary market, I've never really seen anything for sale on there. I think things just get really snapped up very quickly. In fact, I was looking around today, and this is actually what the marketplace tends to look like every time I've looked on Cufflink. It just says no investments are on sale on the secondary market. But what this new feature may do is maybe ignite this marketplace a little bit more. But unfortunately, I think things are just getting snapped up really fast. When people do sell them, they tend to go very quickly. So a nice feature that Cufflink has added. They've also added new dashboard tools, including a new investments figure for totals, a total reserve figure to include select invest reserves and select IFISA reserve totals and a select IFISA reserve figure. So there is some new reporting breakdowns that have been added into Cufflink's, especially on the IFISA side, which for all of our American brethren, that is like an IRA. That's the UK's version of a IRA, which is nicer in the UK. So here we have our picture of our friend, Mr. Stewart Law, who again is echoing what I've been thinking and saying for a while, that Mr. Law warns of dangerous property market dynamic as house prices continue to rise along with the cost of living. House prices grew at a far quicker pace than expected last year. In December, house prices grew by 0.8% month on month, which implies an annual growth of 10.8% year on year, which is absolutely unsustainable, and it's a big jump. And I think mortgage interest rate rises will certainly really cool off the property market in the UK and the US. As these interest rates start to rise, it'll become more of a buyer's market, where it's been a seller's market for a very, very long time. Inflation rose to 5.5% in January, up from 5.4% in December, with some analysts predicting the cost of living could rise by 10% this year. House prices are still on the rise while wages fail to keep pace with inflation. This is a dangerous dynamic for the market, and particularly worrying for low-income and first-time buyers. If current dynamics persist, we will see more and more people locked out of the housing market unless we urgently tackle chronic undersupply. So that means that the UK obviously has a very, very chronic undersupply of new homes being built, especially on the lower side of the price range. What Assets Capital and some other peer-to-peer lending companies are trying to do is to increase their lending to property developers to try to encourage more houses being built in the UK. So, again, the inflation numbers, by the way, these inflation numbers I think are very understated. These are what we are told the inflation rate is, but I believe it to be certainly 3 or 4 points higher than that, probably in the 9% range. That's just from the research I've done, but the government would like us to believe that these rates of inflation are much lower. Let's use the word transitory, because, right, they're transitory, which is not true at all. So, yeah, Stewart Law echoing about signs of a dangerous property market dynamic, which who knows when this is all going to bubble over and burst, but it is coming because it cannot continue. We're going to talk a little bit about ISAs too. There's a little bit of confusion about that. We'll talk about that in a minute. Assets Capital again saying they aim to lend £1 billion in 2022 by the end of the year and 1.5 billion in 2023. So if you're an Assets Capital investor, you are probably going to like the fact that they are going to add more loans to their portfolio and try to get their lending up to £1 billion a year. British Pearl, this one is interesting to me. British Pearl expects new investments after portfolio sale. So British Pearl was a company that I met, several years ago. I met the CEO, Ali. It wasn't really a company I was particularly interested in looking further into. Nothing really struck me as particularly enticing. Well, fast forward a couple of years, and then British Pearl decided that they were going to sell their entire portfolio because they were going to weather the incoming storm. Now they're saying that they will again be offering investments through the platform, as they have managed to reduce their costs significantly. And you can see that right here. I've highlighted it in yellow. British Pearl narrowed its losses year on year during the 12 months between March 2020 and 2021. Doesn't tell you how much. And what they're doing is trying to significantly cut costs. So I decided to do a little bit of digging into British Pearl because I was interested to see exactly how much these losses are. And if you want to follow along, you can go to Companies House, which is a UK company search. And we found British Pearl here, British Pearl Limited. They have their accounts here for March 2020 and also see March 2021. So those two accounting years. I'm going to zoom in right here. Hopefully you can see that. Now, this is the 2021, yeah. So this is the 2021. It's always a little tricky trying to scroll on these PDFs. Where are the numbers? Okay, so we're looking here at number 5. This is an important number of the debtors. 2020, 2.7 million pounds owed by the group undertakings, and then 2021, 2.84 million. Now, not really any details as far as I can tell on this document exactly who this money is owed to. They have only 134,879 pounds in the bank. It doesn't really say anything about, unless I missed it, profit and loss on this on these accounts for 2021. So what I did was look at their 2020 accounts. You can see here for British Pearl. And again, this is not saying that the company is good or bad. I'm just looking at these financial statements, wondering where is the company going to go from here. Let's zoom in a little bit and try to find their profit and loss that is actually listed on this accounts running up to 2020. You can see here the profit and loss, negative 5.2 million pounds. Now, accounting statements can be subjectively analyzed. Accountants can get very creative for tax reasons about the numbers that get put on these statements, I believe. So how much of these are actually real losses is questionable. But you can see right here, this was the 1999 number. It's 4.88 million pound loss, and then 5.2 million pounds shown as a loss on their profit and loss account of 2020. So, just from these numbers here not looking particularly good, you got to wonder, were some of these debts paid off when the property portfolio was sold? And also, why does the 2021 accounts not show this profit loss account statement on here? I don't know. Maybe somebody out there is smarter than I am and can tell me why that's not listed on this document. But I don't know. The numbers to me don't look particularly good. So this is an important reason, I think, if you're going to consider investing through a company, go to company's house, take a look at their accounts, and try to figure out where the company is, because the last thing I think that we want is to get invested through a company that has poor financials, who might be shaky and at risk of going down the toilet, which we've had happen to us before, right? So just word of warning, not necessarily saying that British Pearl is good or bad, because I don't know really much more than what I can read about them, but just buyer beware, take care of what you're investing in, look at the accounts, see if they're funded well, see if they're underfunded. Let's talk about ISAs. We're coming into ISA season, and there's always a bit of confusion when it comes to IFISAs, how many you can open during a tax year and what you can do as far as your previous year's ISAs go. So I've had some emails about that recently. I just wanted to touch on that quickly. The basic rules as they stand today in 2022 February is that you can open one new IFISA account that you can contribute for the year going forward. So if you want to open a loan pad ISA for 2022, you can contribute your allocated amount, which is £20,000. So you would not be able to open a loan pad account and a assets capital account for 2022's money. Now, what you can do is, if you've been contributing to ISAs for the last 10 years and you've got money that you want to move, you can open as many IFISA accounts as you want, and you can fund those accounts with money from previous tax years. So as long as you don't open more than one for 2022's money, so say 2022 to 2023, and that allocation of new money that's going into your ISA, you're good. If you want to open 25 different accounts and split 25,000 from previous years in the past, say 2021's, 2020's, 2019's contributions, you're quite able to do that. So I think it gets a little bit confusing. I hope that that's a law that will be changed. I can't really see any good reason why you wouldn't be able to just open more accounts if you were able to record keep it and keep things in order. Obviously, HMRC, the tax, the UK's IRS has a reason for doing it that way. I really can't figure it out, other than maybe it's an administration thing. They're afraid if people open too many accounts during one year, they're not going to be able to keep records of it. I don't know. I hope that'll change in the future, but I just wanted to touch on that. Shojin, which we're going to dive into a little bit today, is readying for India and the United Arab Emirates expansion. Shojin Property Partners is close to expanding into India and the UAE, with agreements set to be finalized in the next few weeks. Jatin Ondia, hopefully I didn't butcher that name, CEO of the platform Shojin, has said that they will be able to distribute its products through local partnerships once the deals are done. These will be set up as joint ventures with groups that will have local expertise, which will adopt the Shojin brand. I think there's some good and bad points to that. Number one, my dad always told me stick to what you know. If you're based in the UK, stick to the UK. when you start reading out into different countries and you're creating partnerships with people, I don't know, companies maybe that you're not that familiar with, it can be certainly a risk increase to a business's model. On the other hand, what it does is it allows them to expand and possibly offer more types of investment products to people in underserved areas like India, which I think India is quite peer-to-peer lending friendly. The UAE, I don't know anything about them. But after that, Shojin says they are looking at Israel, South Africa, and Canada. I mean, those are certainly some grand plans as far as world domination goes. What I get concerned about is the cost of operations. We already know that peer-to-peer lending companies work on sometimes very thin margins. When you're talking about world expansions, you're talking about a lot more expenses in operations and staff, and how does that impact profits and losses? I would imagine it would impact them quite heavily at the beginning. So it'd be interesting to see what they continue to do. I know they just managed to secure a round of funding. Said Shojin has announced it secured a £5 million underwriting facility ahead of its closing its Series A fundraise. The facility can be increased to 10 million as the deal flow grows. I cannot remember what their Series A fundraise was, what they managed to secure. I think it might have been 100 million, but don't quote me on that. So anyway, I've been interested in Shojin. I wanted to kind of have a poke around. So I decided to open an account. Let me see if I'm logged in here, and I'm going to share my screen because we're going to go through the onboarding. Let's see. Maybe you guys can help me with the questions because I usually get them wrong. If you're opening a new account nowadays, you got to go through this KYC, which is Know Your Customer. It's for anti-money laundering procedures that the FCA is placing on financial companies. So let's go ahead and go through this onboarding. See if we can do this questionnaire quickly. Hopefully it's not too long. Start your questionnaire. If you made an investment through Shojin, is your capital at risk? Yes, I think everything is at risk. So don't answer no when you're asked if your capital is at risk at any financial company. Yes, put yes, it is. So there we go. Are the quoted returns and timing of those returns guaranteed? Yes, I'm guaranteed the returns. No, obviously not. We're going to click no. Can you easily sell your investment during the investment term? No. You can never easily sell anything on the peer-to-peer platform. There's no guarantee. Do all investments on the Shojin platform contain the same level of risk? Of course not. Now, these are questions that are supposed to stump your average investor, which I don't know if they do or not. I think I've gotten a couple wrong, just whizzing through them quickly, but let's see. What do you consider to be a sensible strategy for property investing? Invest all your money in one project. No, I'm just kidding. Spread the risk. What would happen to your investment if Shojin went out of business? That's a good question. It'll be you would not lose the rights to your investment. Shojin Property Partners wind down arrangements will be triggered, and these arrangements are guarantee your earnings will be as expected. No, obviously not that one. So it'll be this one, that the wind down arrangements will be triggered and you are not guaranteed to get anything back. What does Shojin do to reduce risk to your investment? Shojin does the upfront due diligence, co-invests in its funds, oversees the borrower. This is designed to ensure that your investment performs, but it's not guaranteed. This one says your capital and profits are guaranteed, which is not the right answer. Which of the following items does Shojin Partners not manage on investors' behalf? Your investments from start to finish, including credit check, blah, 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 blah. For repayment of capital, investor security and interest in a property, as well as monitor the investment. So it's saying not manage. So this is a trick question, that's been reversed. It doesn't manage provision of personal risk risk-adjusted investment advice. Let's go with that one. Based on your investment experience, which of the following best describes your view on risk? Yeah, I'm adventurous. Have you ever invested in property developments or property-related investments? Yes. Have you ever previously bought unlisted shares or bonds? Yes. Please select the option that best described you. I wish I was retired, but no. I don't know. I'm an executive, whatever. Please choose one of the... We're going to go with leisure, marketing, advertising, PR. Oh, no. Let's go with media and internet. Bingo. Let's see. Did we pass? Let's see. Let's do this. Yes. I understand. So we decided to say we are self-certified as a sophisticated investor. I'm going to fill this little bit in because I don't want to do that on the public stream. Oh, Lord. All these questions I have to fill up. So whenever you open a new peer-to-peer lending account, or even anything to do with a financial account, even a stock trading account, a lot of times you have to go through these questionnaires. The FCA is trying to make sure that you really understand what you're getting yourself into. And they want to protect the consumer. Now, do these questions really protect people? It's questionable. I don't know if they do or not. I think they're a little bit too basic. Sometimes some of the platforms don't even have questionnaires like that. It's just basically I think maybe 4 questions, and they're very easy. I have to put in a phone number. Gosh, they want everything. Let's see. What's my phone number? Does anybody else have that problem? You just don't know what your mobile number is? I do. Oh, now I have to add, oh Lord, proof of address, passport. So I think I'm gonna, yeah, I think I'm gonna probably finish this up later because it's just too much to do right now. I have to get something to do with a bank statement. So it's pretty in depth compared to some of the other peer-to-peer companies out there. This one is a little bit more in depth, which good for them. Good for Trojan for making it more difficult. I'm trying to make sure I'm not some kind of crazy money launderer. But let's take a look around that platform on the outside since we can't get in at the moment. I should be in next week. Let's take a look here. What do they have? What type of loan offerings? So you can see here they're pretty decent size things that they're offering. This is a Hilton Hotel, Glasgow City Centre. You can put it in an ISA if you want to get a tax-free wrapper on it. Fixed return, 12% projected, funding target 1.5 million, term of 30 to 36 months. Then we have a Shoujin Series A. What is this? Let me see the details. So this is where you're actually investing in Shoujin itself. Projected returns. What would you get on this? They probably, they're saying targeted returns 5 to 8 times. They're trying to raise 3.18 million. Yeah, I am not a fan of investing in these companies' growth. I think it's highly risky. I'd prefer not to do that myself. So if you pick up any of these, I don't know if you can call them a bond, but basically you're funding their growth, Shoujin's growth, which it's not for everyone. And then this one, we got the Landmark Place Mezzanine Shopping Center in Slough, 14% annual return, term of 24 months. Quite high returns. Remember, if you're getting paid 14%, that the borrower is paying quite a lot in interest. Expected gross development of £33.79 million, excluding sales costs. Expected total cost $27.7 million. Expected profit $5.57 million. The developers are putting in 725 grand. You got to put in minimum of 10K. So that's another thing. If you're looking to invest in some of these projects, you're going to have to pony up quite a lot of money, which some people are not going to want to do. I always take these numbers, by the way, these expected profit numbers, and I reduce them by 20% because I found that they're very rarely ever accurate. And these costs always tend to be 10 to 15% more. That's why the reduction on the expected profit, but sometimes they can get close to the profit, but usually these expenses are never accurate, especially with what's going on with building development costs. Raw materials are getting more expensive because of inflation. We got these supply chain issues. So take these numbers with a pinch of salt and just be aware when you're getting paid 14% on a project that there is going to be some significant risk. Let's have a look at this one, this Hilton. This one's got a bigger profit range, 10.2 million. Minimum investment 5,000. Wonder what their bond minimum is. Does it say? Minimum investment £10,021. Not just 10,000, but you got to put in the extra 21 on this one. It's quite a bit. Let me know if you're an investor through Shojin, if anybody out there has actually invested in any of their projects, and have you gotten paid back? We got this Marble Street in Leicester at 14.3%. So, I mean, look at this. Projected returns 15 to 17% on this lakeside building. Wow. 24% returns. This is just insane. It's a lot of, it's a high return, right? So it looks like they got some projects that you could potentially do well on. Just remember there is risk there. What else? Let's look at assets capital too. Let me see how long we've been running for. I don't want to run on too long. 38 minutes. Okay. Yeah, if you have any questions or comments, please put them in the stream. I'll read them at the end. Hit that thumbs up if you can, if you like the content. We're going to be peer-to-peer based tonight. We are going to look at the trading 212 portfolio. Just briefly see what's going on with that. I'm desperately trying to get it over 16,000 and so far not been able to do that. Let's see. You log in here. I like Assets Capital login because if you're at all concerned about account security like I am, you get this cool little authentication. And what did I do here? So you have to authorize it on your phone and then it lets you in. I messed it up because I was talking. Here we go. So I hit approve and that gets me in. Don't even have to click a button. See what's going on with my loans here. There is a lot of red. This is my manual loan portfolio. Look at, thankfully not much of a holding, but some of these loans I have smaller pieces in. These are all loans I invested in years ago. Trading suspended, trading suspended, trading suspended, trading suspended. A lot of trading suspended loans. Don't know if I'm going to get the money back on those. But Assets Capital does have provision funds. And I was just doing a little bit of digging into these provision funds today because I wanted to see how much those funds are holding. So this is the quick access account, which pays, I think, 3.75% annually. And when you invest in one of these quick access accounts, you are basically buying into every single loan inside the bucket. along with all the other investors, so you share the risk equally. You can see here that the lender interest rates are paying on these assets loan a minimum of 4.5%. So they pay up to 13% maximum, which is quite high. The loan terms are up to 5 years. Here's the 3.75% that you can expect. Interestingly, what we look down here is this is the provision fund, and it is only as of 31st of August 2021. I don't know why this hasn't been updated since then. These numbers are very old, but this is back then. There was 33.9 million in the QAA account, the quick access account, and loans, but the value of the provision fund is only £620,000, which really doesn't cover anything. Now, if you look lower, there is a ring-fenced amount, which is held in addition to the provision fund value of £2.17 million. However, this ring-fenced amount of money is actually not, it says it's not available for use against loans which may default in the future. So this is money that has actually been allocated to, as I understand it, and correct me if I'm wrong, but to loans that are in default and that have run into trouble. So 2.17 really doesn't leave much in the provision fund itself. If we look at the 30-day account, it seems to be more of the same. This one is actually worse, only £310,000 in the actual provision fund, with 2.53 million locked away in the past for loans that have gone bad. 39.8 million, and I would imagine this number would be higher now because we are 6 months down the road. And then if we look at the 90-day account, the provision fund is only £240,000 on a £41.4 million bucket of loans, with 2.6 million held in the ring fencing. So I wanted to do a little digging on this ring fencing and what this exactly means. See, the assets capital accounts prioritize liquidity and consistency of interest payments and seek to, let's see if we can see that, seek to avoid where possible situations where lenders are unable to withdraw their funds in normal market conditions. So this is what the ring fencing side of the provision fund, this is the 2 million plus in each account that is held back on ring fence. For this reason, all loans remain tradable within the access accounts, and all access account lenders participate equally in every loan held within the relevant account. This means that lenders will own parts of loans which may be difficult, which may be in difficulty or even default. To treat lenders fairly and to avoid situations where a lender might join a loan which may already be facing a loss, the discretionary decision for access account loans is taken once the loan defaults or assets considers that the borrower is unlikely to pay, or that the loan is subject to a monitoring event or a capital value discount, which gets disclosed on the loan record. So skip forward to here, right down here. This ring fence amounts are not included in the available funds for the provision funds, as they are no longer available, having already been allocated against the loan in question. Should the loan recover and become fully performing loan again, perhaps the borrower corrects issues which cause the loan to default or to be monitored, then the ring-fenced funds can be released and become available funds within the provision fund once more. So yeah, basically what this is saying is that this 2.53 million that is being held in the ring fencing cannot be used for future loan defaults, and there is only 310 grand sitting in their provision fund. Again, we don't know what these numbers are now today, but I'm imagining, I've always actually kept an eye on this number, and it's never been particularly high in any of those access accounts. It's a relatively small, I mean, we're talking about what, 1%? Is that 1%? No, 10%. No, 1%. 1% of this total outstanding amount of loans is liquidly available, and then 2.5, what is that? 1%, 10%, 5%. 5% has been ring-fenced to provide coverage for previous loans that have run into trouble. So even though assets does have provision funds in place, they're definitely not the most robust in the world, which is why when I'm looking at my account, I'm imagining these loans that are trading suspended. I mean, some of them are not big enough to be covered by the provision funds. Some of these loan sites, even though with assets capital, these capital payments are getting reduced usually each month. So depending on how much is outstanding, these provision funds are just not going to cover these defaulted loans. I mean, look at this one, 2 million, 1.3 million, 1.2 million, 1.8. Oh no, that one's not in default. 1.1 million. This is just way too much that is in default to be covered by those provision funds. So just something to know when you're investing through assets capital. If you think any of your loans are going to be covered through the provision funds, it's questionable as to exactly how that would work. What else? We're going to just take a look real quick at the Trading 212 portfolio. Where are we today? 15,710 pounds. We just cannot get over this 16,000 pound hump. There has been a lot of turbulence in the markets. Let's see, Alibaba down 1% today. Obviously, the situation in the Ukraine and the Russian border is a problem. It's going to create a lot of market uncertainty, especially if Russia decides to go in. But one of the items that we did pick up, and I put a message on the Facebook group about this today, that I've been buying gold positions because I think that there's a lot of uncertainty in the stock market right now. If what I think happens with regards to the Ukrainians, gold is probably going to be a safe haven if the markets do downturn backwards. I don't think the stock market is going to like any type of conflict between those two countries. So you can see here, this investment made into Barrick Gold just recently is now up 11%. We're starting to see that gold market rise up. And just to say, I'm not a fan of gold in any way, but I am a fan of protection of capital. And rather than sitting in cash, what we can do, and again, not financial advice, please don't copy me, but you move sectors, right? If my personal opinion is, if there is a conflict between those two countries, some of these stocks are just going to get absolutely hammered, especially tech, things like that. There's going to be a lot of uncertainty, whereas you might see a drop in the oil stocks temporarily, but I think oil prices just continue to go up, and then a lot of money gets offloaded into the gold sector because gold has always been considered a safe haven. So I did put some of this Trading 212 into the gold. I probably should have done more because I got some cash sitting on the sidelines. But, not being a big proponent of gold, I didn't want to take too big of a position. But I think there could be an argument for taking more of a position in gold, precious metals at the moment. And so how is oil doing today? LPI is down in the red. It's been a turbulent day. Look at this. Up to 74 today and now back down to 70. So that's a 5% swing. Really not sure what's going in the oil markets where it would be so volatile today, but there could be some news. Oh, and Palantir. Look at this. Horrible earnings report today. And watch the price. 14% dump. So again, just another real life case proof of how you can completely get this stock picking wrong. I mean, I've done it on this Palantir stock. We are down 53%. Thank God we didn't bet the house on it, because I believe that Palantir in the long run is probably going to be a great company, and I think that this is price at $11 might be a steal. But I made a $25 US average buy into this, and that has not worked out well. But thankfully, the other oil stocks and energy stocks have held this portfolio up really well. Again, picking out sectors, very, very difficult. But you have to try to make the best decisions you can. I thought Alibaba was going to be a good play, and I think long term it probably will. I think it's discounted. You always have risk of these Chinese companies. You can get taken over by the government at any time. It's kind of scary. But just a small punt into Alibaba. Oh, look, we just went under 15,700 as we speak. Probably should have held Zillow too. That was another sell too early case. We're down a little. Yeah, it's down a little bit. I think Zillow was up to, look at that, 65. We sold at 59 down here. But just another case of missed timing costing profit, because we don't know. The crystal ball is never right. Never, ever, ever is that crystal ball right. Need to get a new one. Anyway, that's the information I got for you today. Hope you enjoyed it. Hope it was helpful. I know sometimes I blabber a little bit, but that's just the way it is. Oh, I got the England shirt on today. The 1966 World Cup victory. A single one. Hopefully we'll get another one too. You never know. All right. I'm going to run through your comments real quick. Try to get out of here. Hey, we might be under an hour today. Patty is Jeff from Hampshire. Hi from France, Patty, aka Jeff. Oh, okay. I didn't know Jeff was Patty. That's a good alias. Early 90s had mid-teens mortgage rates. Gotcha. So it was the early 90s. I was thinking it was the 80s, but got that. Are you having a storm? Is that what's going on in the UK? Is there something nasty heading your way? I haven't looked at the weather. Not to piss you off, but it's very warm here today. I think it's 21 degrees. Too much. I promise you there'll be a new bike video coming out. I've recorded a ton of footage too, so I just got to edit it. Takes a while. Brian says, I sold £2,000 on Cufflink's marketplace in about 6 minutes. Exactly. Yeah, Robert, read Dave's comments about the ISA. I'm not a tax professional. Yeah, it depends about whether the ISA is flexible or not. So as far as I understand, if you take money out of it during a tax year, you have the ability to replace it back in, as long as you do it before the end of the tax year. If it's a non-flexible ISA, you cannot, once you pull the money out, you can't put it back in. So it's important to know if it's flexible or not flexible. I think most of the ISAs through the peer-to-peer lending companies are flexible. So he says, running out of good places to put money peer-to-peer. Yeah, that's what we try to do, is we try to find the best places. Richard McGoogle, Assets Capital does well offering financial products to small builders. It would be great if self-builds were added. I've never heard of a self-build that hasn't made money yet. Patty says, I bought gold for the first time today. Well, hey, there you go. You think the FCA might do a solvency grade on peer-to-peer companies? That would be helpful. Yeah, but what if they get it wrong? They would come over under so much scrutiny. Yeah, Patty, agree with you. I think gold might be a good hedge. Is there a gold crypto coin? No, not that I know of. I think if you wanted to invest in a cryptocurrency coin that is relatively stable, you would want to just get a stable coin like USDC. Problem for people in England, you have the currency risk, and the US, I think it's the US, no, the UTGB or something like that is very small. It doesn't have, let me check it. I think there's a British stable coin. Let's take a look. See here, these stable coins, you can, if you watch the stream on Tuesday, we were talking about staking. Oh, and by the way, I did find out you can stake coins at crypto.com. If you live in the UK, you can open a crypto.com account. But you can see the tether right here. Hopefully you can see that. Let me zoom in. Number 3 coin right here is at $1. So it's pegged to the US dollar. And then the USDC coin is just a little bit under a dollar, 0.99995. They tend to really stay directly pegged to the dollar, but you could buy those. I think those in my opinion would be the equivalent of buying gold in cryptocurrency because they don't move. And then you can stake them for 8 or 9% APR a year through a company like crypto.com that is going to actually lend those coins out to borrowers. So they are lending your coins out, but it is a very large reputable crypto platform. That's about as good as you're going to get. Let's see what if there is the US. Let's see, British crypto stable coin. Can't remember what it's called. See here, you got Binance discontinues UK stable coin. This is interesting. The BGBP, calling it an experiment. I can't honestly remember. Is it the GBPP? What the hell is it called? The problem is though, there's just not a big market cap on what I researched. I think it was $100 million, which maybe even less than that. And the thing that makes these coins a little bit more stable and less risky is because of the market caps. We got a $52.6 million market cap on USDC and a $78 billion market cap on Tether. So that means that there is actually $78 billion of actual currency, whether it's dollars or pounds, have gone into this stable coin. And then $52 billion of currency have gone into this USDC coin. So I think that creates stability. It's still a relatively small amount compared to Bitcoin. By the way, Bitcoin on sale today at 41,000 US. Still fluctuation. But if I'm going to bet on a more stable way of investing to get an APR percentage in crypto, I'm doing it through USDC. Even if I do have to worry a little bit about the currency fluctuation between the pound and the dollar, just because I trust that USDC is going to be a reputable place personally that I could store money and get an APR return. Tether, I tend to stay away from. I think USDC is the coin to do that. But if you are investing in the British version, just look at the market cap. If it's small, market cap, say, of 10 million or 100 million pounds, just, it's a relatively small amount of the total crypto market cap, which is at 1.8 trillion US. So there is risk there that coin could fail and you could lose your hard-earned wonga. Long answer to Richard McDougall's question. Let's see. Buying a little oil stock. Yeah. I think we're really, really into a turbulent economic few months coming up. Richard, I read that crowd properties cash on deposit isn't covered by the FSCS, unlike some other cash on deposits. That needs to be looked into. Yeah, I will look into that. Am I worried about assets capital and withdrawing your capital? No, I am not. Yeah, Peter is right too. The assets provision fund doesn't pay out on manual. Oh, it doesn't. Okay. Right, you're right. It doesn't pay out on manual account loans. We were just looking at the access account. So I'm pretty sure that a lot of those manual loans that I invested in are probably going to go poof into thin air. But who knows? Maybe they'll get some of the money back. Why is crypto seemingly going down when the stock market goes down? It's not tied to the stock market, so is it market manipulation? No, I think it's a lot of just fear when we're seeing this tie right now to the markets. In some cases, I think it's retail investor fear. Also, it's some institution money will move around when stock markets go down. If you can imagine, if you're a money manager and you're working for an institutional company and you have crypto to manage, you're probably being told, hey, if the markets dump, maybe you short your position, maybe you sell off some to get some cash for later buying opportunities. You got to remember, some of these institutions are trading too. They're buying and selling crypto, so you're going to see some of that volatility. But it's also, crypto has not been coupled to the stock market at certain times where you've seen them do very inverse things, where crypto is going up, the markets are going down, and vice versa. But there are some times where crypto is just going to follow the stock market because of what's going on in global situations, especially with what's going on in the Ukraine, with the fear. Oh, we got a lot of chat today. See if I can see any other questions. Good night, Invest22. Thanks for joining us. I'll have to check my trading. Okay. I think that's going to wrap things up. So, again, thank you to everybody for joining. Come back on Tuesday. All being well, we'll be streaming on Tuesday evening. Crypto, stock trading, all that good stuff. Keeping the peer-to-peer out of it on Tuesdays. That'll be strictly for Thursdays from now on. That's the plan anyways, Sometimes plans don't work out. But yes, thank you again. Have a great weekend. Thanks for joining. Hit that thumbs up before you leave, and I will see you next time. Take care. Bye.